Hello, and welcome back to the Lazy Money Game, to yet another exciting week on the stock market. In this episode, I will walk you through the news, give an update on my portfolio, and finally, I will answer some questions which I have received from the audience. So let's start by taking a look at the news. Oil futures goes below zero. What that means is someone is willing to pay you money to send you oil in the future. This sounds completely absurd when you hear it for the first time. But let's see if we can explain how we end up in a situation like that. So looking at it from a completely economic perspective, we have demand and supply. And demand has been hammered down due to this COVID-19 situation, since we are traveling much less than we usually do. So there's very little traffic in cars and planes, and there was a lot of factories which has also closed down, and this happened overnight. And at the same time, on the supply side, there was this price war going on, since OPEC could not agree on how much oil they should keep pumping, so the supply was actually increased as well. That led to all the storage facilities being filled. So now, instead of closing down the production facilities for oil, it's actually cheaper for them to give you the oil and give you some money instead of closing down their production facilities. That's how we end up in a situation where they are willing to pay you money to receive their product. This can also be seen in the freight rates for oil, where we see a huge price spike these days. There is such a big demand for transportation of the oil, and there is so little supply. And if you are owning US oil stocks, then perhaps you will take comfort in Donald Trump's tweet. We will never let the great US oil and gas industry down. I have instructed the Secretary of Energy and Secretary of the Treasury to formulate a plan which will make funds available so that these very important companies and jobs will be secured long into the future. If you are not familiar with what a future contract is, I have made a video specifically for that subject, and given the feedback I have received, I think it's worth your time. At least I have received a really nice comment saying, "The best explanation for a future contract I have ever received." So thanks for those kind words. That matters a lot to me. The second news this week is a new relief package is in place in the United States. $484 billion. This is on top of the already agreed relief package of $2,300 billion. The new relief package is part of this Paycheck and Protection Program. They are acknowledging that a lot of Americans are losing their job these days. The total number is now around 26 million. So of course they have to go and support more, and this is exactly what they are doing. Whether or not it is enough, time will tell. So the third news that I would like to highlight this week is the relief package in the EU, or rather the lack of a relief package, since the leaders could not reach an agreement. So Italy, Spain and France would like to have 1.5 trillion euros in grants made of perpetual bonds, whereas Germany, the Netherlands and the Scandinavian countries prefer to have it as loans instead. So far we haven't reached an agreement, and when we will, only time will tell. Of course, we also have to address the COVID situation. So these are the numbers from last week. 2.3 million confirmed cases, 161,000 dead people. So let's see how that compares to this week's numbers. So when we look at this week's numbers, we see 2.9 million confirmed cases and 203,000 dead people. So we are still seeing the numbers are increasing, but the rate at which they are increasing is slower than what we have seen previously. So that is at least one good news. It's still horrible to look at this, but at least it seems like it's slowing down on an overall level. So this covers the news for this week. I will of course leave links in the description below, and I suggest you go and read them because there's much more detailed information there. I'm just bringing the highlights due to the fair use of content. Now, let's take a closer look at my portfolio and see what has happened within the week. First of all, I have tried to zoom in since I had a comment about it is hard to read what is on the screen, so now I have zoomed a little more just to hopefully make it a bit easier for you to see the numbers on the screen. So the first thing we notice is that my portfolio have lost a little more than $1,500 in value compared to last week. This comes as no surprise since the S&P 500 is also down in value. However, the S&P 500 is only down 9 points for the week, and my portfolio is down even more. But when you look to the companies inside my portfolio, I think it makes total sense that my portfolio is down even more. Even my two newest acquisitions, Realty Income Corp and Cardinal Health, are down in value. But I mean, if you don't have the stomach to deal with downturns in your portfolio, then you should simply stay away. As you can see from my portfolio, currently I'm severely down. But in the long run, I believe that the companies I hold will be worth more than they are today, and even worth more than when I initially bought them. I am much more concerned about the dividend cuts which I'm seeing in my portfolio. For instance, I have mentioned Macy's, which have cut the dividend. I still think that is the only sensible choice for them to do, since they are forced to close all their stores. Tailored Brands has also cut their dividends completely, and I'm pretty sure that the Carnival Corporation will have to do the same as well. So I'm holding on to these companies because I believe this is truly an extraordinary time, and I think that they will be able to survive and come back even stronger. I might be wrong, but currently I'm still holding on to those. So no matter if the market continues to drop or if the market starts to rise, I will constantly be sitting and looking for what I consider to be good deals. And currently I'm really focused on the balance sheets of the companies, since it seems inevitably that we will hit a recession, so you need to find companies that will be able to withstand and potentially come out stronger. So that more or less sums up the portfolio update for this week, since the only thing which has happened is the $10 which I have received in dividends. They are not added to the cost since I haven't reinvested them. You could of course argue that I should have a cell with the cash balance on my portfolio, but I prefer only to show what is actually invested in the portfolio, since I could do whatever with those $10. So I will only include value into my portfolio once it is invested. And I have a personal preference for investing more than $10 at a time, but that's just me. So that covered the portfolio update. So now let's turn to some questions from the audience. So the first question I have received is this access request to my Google Sheet. And I have to inform you, you are not going to get access into my sheet because I don't want you to add stocks into my portfolio. But what I will show you is how you can use my Google Sheet for your own portfolio. So when you enter the link that I have left in the description below, what you do is you go and press File, you say Make Copy, and then you type Thanks for the advice, or whatever name you would like to have on your Google Sheet. Then you press OK. And then you are waiting and waiting, and then you will have an exact copy of my sheet, and then you are free to go and play around. That is how I intend for you to use my Google Sheet. So the next question that I have received is by far the longest one that I have yet received. It goes like this. Hello, your videos have been extremely helpful. I watched most of them and I will finish them all and continue to watch them, but I feel like every minute I'm not investing even a little bit, I'm losing potential money, even if it won't be much. I'm a student in Bulgaria and I don't have a lot of money to my name right now and can't afford to invest too much. For a person like me, who can afford to invest maximum €50 at the moment at least, What way would you suggest I play my cards with the Revolut app, or should I be looking at something different? With the coronavirus right now, I'm not sure if I should be investing right now. It's obvious that you can buy stocks in companies cheaper right now. I've done some research, but still not sure which companies to go for. Have been keeping an eye on to cruise line companies like Carnival and CLH, RCI, and maybe they have a chance to recover, especially when Saudi Arabia has bought 8% of Carnival. Cruise lines and airlines are the obvious companies to invest in right now, at least to me, since they will always be working, but maybe I'm missing something. That's why I'm asking you for your opinion. I don't mind investing a little by little in a few companies and just being patient because I'm in no rush, but still I'm trying to make something on my own, or at least have a passive income, even if it's not much, just to get a hang of it, and when I can afford to invest more, to do it. I understand that you are no professional and that your advice is just that, a friendly advice. I can imagine you're a busy person, but I'll be grateful if you can point me in a direction where you have the time. Thanks in advance. So thank you very much for your question and for your kind words about my videos. I am delighted to hear that you find the videos useful. I understand your feeling about losing potential revenue when you are not investing. It's only natural. It's usually referred to the fear of missing out. It is, however, a very bad strategy to buy anything before you have finished your research. Let me quote Peter Lynch here. You don't lose anything by not owning a successful stock. The sooner you realize that you will always miss out on a lot of opportunities, the sooner you will be able to live with it. Since you're a student and can't afford to invest a lot, I would suggest that you hold on to your savings for now, since it's really important to have savings these days, with a lot of people losing their job and not the best outlook to get a new job. If you can't afford to invest more than 50 euros, then your saving is not that big, and it will, in my humble opinion, be a better investment to increase your savings. The point would be, if you only have 50 euros to invest, think about the wage you are paying yourself by spending hours on research. For instance, if you spend 10 to 20 hours on research for a 10% return in a year, you are getting 5 euros in a year for 10 to 20 hours of work. And that's if you are successful. Before putting your money to work, I would say that your hours are better spent trying to earn some extra money by a job on a side hustle to increase your savings. And let's start your investing / lazy money game at a later point. I am not saying that you should completely forget about investing. I would just say that you should focus more on getting a bigger savings before you put your hard-earned money to work. This also gives you the advantage to learn more about investing before you actually put your money to work. When it comes to the platform / broker you should choose, then you really need to find something with a low cost where you're not punished for being a small investor. Here is Revolut the best choice that I know of, as you know from my videos. One thing that you need to think about is that Revolut will be a foreign broker, and you need to know how that will be taxed in your country. Unfortunately, I can't help with an answer there. This will also add to the spending time with research, so maybe 10 to 20 hours seemed a little bit too optimistic actually. Now to the fun part about the companies you have done some research on. First, I will start by saying you're doing a great job by rechecking your story to see if there's something you have missed. That's really a good start. To whether or not these companies are good to buy right now, let me quote Peter Lynch again. Buying a company with a mediocre prospect just because the stock is cheap is a losing technique. If you have seen episode 12 and 13, hopefully that answered the question about how I feel about airlines and cruise lines. Airlines are in better shapes than cruise lines since they will receive the relief package. If you are investing for the dividends, you will have to wait for years in these companies before you will receive any. Of course, depending on how COVID-19 develops there is a potential risk that some of the cruise lines will go bankrupt. Hence, you really need to look at the risk and reward here. I suggest to look closely at the balance sheet and see asset versus liabilities. So if you are going to invest in these very risky stocks, I would suggest only a very small percentage of your portfolio, meaning 1 to 2%. So hopefully that answered your questions. Otherwise, feel free to ask again. So that concludes yet another exciting week on the stock market. So remember to comment, like and subscribe. And until I see you next Sunday, bye!